Prices are on the rise, so listen into today's episode as we talk about how to beat retirement's nemesis, inflation.
Welcome to the Your Life, Your Money podcast with Scott Searins, teaching you how to thrive in life, wealth, and retirement.
Well, glad to have you on Your Life, Your Money, helping you thrive in life, wealth, and retirement with Scott Searins. I'm Ben George, and it's a topic that is everywhere, Scott. We can't avoid it. Inflation. I think this is like the main talking point. It feels like right now we moved on from like the market and like the pandemic, and now like everybody's attention, it seems like, is on inflation right now.
You know, it's one of those things like when you start, there's certain people in your life when they start asking you questions about or telling you about, or you start to see Facebook posts about, well, the price of something went up. Now all of a sudden you realize like, wow, it is really on everybody's mind. Yes, inflation is going up. Ben, how about yourself? What's the number one thing that you've recognized that's gone up in price?
Well, I mean, gas is the obvious, right? Gas is like the most immediate thing you can always kind of measure day to day, because you don't really see like if there's a 10-cent increase on your eggs. You don't really notice that right away. It's like 2 or 3 years down the line. But I was talking to a buddy recently, and this kind of ties into the housing market too, but I think there's also a little bit of inflation in that. But somebody was telling me a place I used to live up in Connecticut that it's been like 6-8 years now. They were telling me the rent prices in that area now, and they were just, I mean, astronomical compared to what I was paying. And it's like the area is the same, right? Not a whole lot's changed. I know the housing market is super tight right now, and there's not a lot of supply out there, so the demand is really increased. That's part of it. But just seeing, like hearing some of those numbers, like it blew me away how expensive it was to just live in a lot of places right now.
Yeah, I mean, you're right. The housing market continues to go up, and I think a lot of people are worried about a housing bubble. I've read a few articles where they just, are kind of looking at I'll call it statistics within the housing, and there's, everybody's still saying that there's a shortage, right? There's actually a shortage of housing out there. I know, and I've got a few clients that are realtors, and they're saying never before have they seen so much cash brought to the table when it comes to, people putting their bids down for a new house, etc. And, I think from everything we've learned in 2008, hopefully there's not a lot of, I'll call it, excessive debt that couldn't be paid off. So, yeah, I look at that as pure inflation, right, of what's going on in the cost of living from a housing perspective. That's an interesting one.
Yeah, what is there anything you've noticed day to day that's really kind of caught your attention price-wise?
So I'm not much of a cook, which leads me to grilling out a lot. And I'm constantly at the grocery store buying either steak or pork chops. I guess that's the farm boy in me is, I like I like my steak, like grilling out pork chops. And I think that was like when I really started to kind of see it the most. I agree with you. I probably, good or bad, not paying attention to the price of eggs that I'm buying every day, but just looked down the other day and I was like, picking up the same pack of 4 pork chops that I normally pick up. And I'm like, whoa, that's like that's like $3 more than it was last time. And it just kind of, it hit me in staring at that. So, I mean, there's no doubt about it. The prices are of your grocery cart, the prices of just cost of living. Hey, everything is going up.
Yeah, that's so true. And I think like I guess there's a lot of different factors, and I'm not a great economist, but I know like supply chain adds into it, and there's just so many things that are kind of adding into this, but it's very noticeable in many different aspects, and people are trying to deal with it. And it's especially true if you're approaching retirement, right? I mean, this is like one of those fears, like it's like the market tanking, right? As you're getting into retirement, obviously you want to build a plan that can account for these big swings or, any issues that you might face in life. And inflation's one of those, right? If you're now all of a sudden getting to retirement and you're seeing the cost of everything go up, and, yeah, sure, the Social Security cost of living increase last year or for this year was, significant, but I don't even know if this is going to be able to keep up with what we're doing right now, what we're seeing with inflation. So this is a question a lot of people are asking is like, how big of a threat is inflation to my retirement?
You're exactly right. And, because your grocery bill goes up, your gas bill goes up, your electric bill goes up. $1 today, and I guess, just kind of what is inflation? It's the cost of goods and services going up, but you're like, how does that relate to me? And it's, your $1 bill today is going to buy you less than what it would have bought you a year ago, right? So my $6 a year ago would have bought me that 4-pack of pork chops, but that $6 today is not only going to get me that, a 3-pack, right? Or something different. And that's what it is. It's the same dollars that you have today is buying you less. And so it becomes even more important that your retirement savings, what you've saved up, is properly allocated to help you keep up with the cost of goods as they go up. And I know it's on everybody's mind, and it's funny you say that. I think we've got a couple great articles just to kind of talk about, review today, help everybody understand, how to plan for, and also, how to allocate themselves to help beat inflation. But yeah, it's on everybody's minds because it's in the news. And I think you had mentioned the Social Security increase, which was, I believe, like 5.9%, somewhere around there.
Yeah.
And I believe the last, one of the inflation statistics that we'll give, as we go through today was like over 6%.
Yeah.
Right? For within the last year. So you're right. Like if it's not matching up, then where are you getting that balance from?
Yeah. So that's the focus today on this episode of Your Life, Your Money. We're going to put it up online at lifemoneyshow.com. You'll also find Scott's videos that he does. He has a YouTube channel he runs there, and a lot more on the website. So that's a great hub if you want to just learn more and continue educating yourself. That's a great place to start. Again, lifemoneyshow.com. You referenced the 2 articles. So there's one from CNBC that is about Americans seeing inflation as this biggest risk of their retirement. And then there's a second one from the New York Times about how to beat retirement's nemesis, inflation. We'll put both of these articles, a link to them, in our show notes so you can access them and read them for yourselves there. But we want to kind of dive into these a little bit and talk about it. Let's start first, Scott, with this CNBC article and really address whether or not this is a huge risk and why it's a huge risk to retirement plans. But that one stat that you pointed out, inflation rose 6.8% in November, nearly 7% from 1 year ago. That was the fastest acceleration since 1982. So 40 years, that is the biggest acceleration since that time. And, much of that, as you pointed out, tracks that consumer goods and services. So it's a very significant thing. But in this article with CNBC, it said about 25% of Americans say rising prices are the greatest retirement threat. And last year, Scott, only 8% of Americans said that.
And I wonder if this is, partially just due to the news because we've seen such growth in the inflation rates, just like you were just talking, right? But it is something that needs to be paid attention to because as you go into retirement, you no longer have that company paycheck coming in. And a lot of times, I'm not saying every company and everybody's, situation is different, but a lot of times companies are increasing your wages to help you help you and your lifestyle keep up with the cost of living. But when you retire, you no longer have that company paycheck coming in. So now you're relying on Social Security, which our example, right? We just talked about how the Social Security cost of living adjustment really nice, but it was below the number that you just gave from, that 1 year inflation rate. Then some people do or do not have a pension, and on those pensions, I'll say most pensions have inflation on them. Some do. So, you might have a pension, which is great, but that could be just something that's staying static. So again, your dollar today, right, is going to buy you less than it would have bought a year ago. And I think this is probably the most important part, is like what you've saved up for retirement. So you're going to rely pretty heavily on that to live your retirement lifestyle. And I think there becomes this fear because, hey, we just saw it shoot up so quickly here there's this fear now that, okay, well, hey, how do I make sure that my retirement savings helps me keep up with inflation that's just skyrocketing? And I think, again, we have to try to I get it. It's in the news right now. It's happening right now. But we also have to kind of take ourselves out of just this short-term, time perspective and think about history as well. And we'll link to it in the show notes, but there was a good there's JP Morgan comes out with this guide to the markets each and every quarter. Actually, I think they come out with it each and every month, but their free one that you're able to look at is each and every quarter. And if you look at the 50-year, I think it's a 50-year average for inflation, it's 3.9%. And now, again, that's nothing to laugh at, right? That's still a pretty big number, but it wasn't the 6.9 or 7% that you were talking about, Ben. So I wonder if these increased fears come from just, this huge spike that we're currently seeing. But we have to remember it's a fluctuating number. So while it's going to go up, part of our economic cycle is at some point in time, I'm certain that it'll, now I can't say I'm certain, but, we should probably see it go down again.
Hopefully. I think that's what we all are hoping. I know we can't, we worry about trying to sustain that, but, the worry is so real that we always talk about on this show, and just when you're talking about financial and retirement planning, the biggest concern almost always is I don't want to run out of money. I don't want to outlive my money, especially as we're living longer and longer. But, inflation is even past that, surpassed that worry as the number one concern right now, which is crazy because, the first thing you always think of is, hey, do I have enough money? Will my money last? But even on top of that, there's healthcare costs, which continue to go up as well, right, which have been a huge concern for so many people. But even those have moved to the back burner now.
That was the really, in reading the article, that was the really, I would say, the most interesting part of that article to me is that out of these people that were polled, inflation overtook that fear of running out of money. And that, I guess maybe I look at that as a positive thing to saying, hey, lots of people have saved up for their retirement, but to actually put inflation now above that fear of running out of money, it just says, yeah, it's an actual fear. It's something that people are worried about. We've seen this recent spike, and I think rather than be, or have this fear, and this fear of something that we can't control, instead, and this is what we do on the podcast, right, and all of our shows and conversations is instead, let's focus on actions that we can take and actions that we can control to help us reduce these fears.
Yeah, and the article even points out too, Scott, that a lot of people aren't even making planning a priority. Although everybody's concerned, everybody's worried, it's still not a priority in 2022 to, hey, let me make sure my retirement plan's in order, which is crazy to me that, to have this kind of concern. I mean, how else do you think you're going to work around it, right? Without having a plan.
I think, you're exactly right? You can either sit around and just be nervous and concerned and in fear all day, or do something about it.
Yeah, got to. Well, how does inflation relate to retirement specifically as you're trying to figure out these plans and work with clients to really, ease these fears and these worries and also plan for it?
Well, inflation, as we talked, it's the cost of goods and services going up. And so one of the things that you have to just recognize and put as part of your retirement plan is you got to put inflation in there, some sort of number. And, everybody looks at retirement years a little bit differently. Sometimes people say you have those go-go years right away, and then maybe the slow-go years, and then those years where you're not really going out and doing it, doing the things that you used to do. So it makes it tough into how much inflation do you actually plan for in your retirement. So I think one of the things is thinking through that, right? And then putting a number to it, and just saying, hey, if our lifestyle today is, $6,000 a month or $8,000 a month, then how much, as we kind of plan that out, how much should we plan for those lifestyle expenses to continue to go up? Is there a point where we kind of think they might just level off? And is there a point where we think that they might go down? And then that's kind of where those, later years in life, you might have to plan on long-term care or more health costs. And of course, health has its own inflation numbers to it. So I think it's just, you have to make sure that it's part of your plan, and we'll talk about some actions to take care. But just understanding, the cost of goods and services are going to go up. You're going to be living off Social Security, maybe a pension, maybe some rental income. So a lot of your income will be coming from your retirement savings. And then how are you allocating that to make sure as the cost of goods and services go up that you can keep up with it?
Well, let's shift gears then and talk about how you can beat inflation in retirement, because we have this New York Times article as well, which is called How to Beat Retirement's Nemesis, Inflation. And this quote from the article paints a pretty bleak picture, Scott.
I thought so too.
Even if you're a retirement super saver, which is what we all try to achieve, inflation is always lurking like a chronic, incurable disease, eroding retirement benefits that often fail to keep up with the rising cost of living.
They didn't mess around. They just put it right out there, huh?
Yeah, they painted quite the picture.
I mean, I think we've definitely hounded on it that unfortunately inflation's part of life. The cost of goods and services will continue to go up. Your grocery bill is going to continue to go up throughout life. Your electric bill, all of these things are going to continue to go up throughout our lives, sometimes at faster rates than others. And so we have to plan for it. And there's, either planning for it and prepping for it, or not planning for it and then maybe coming to later in life where you say, oh gosh, I didn't plan for this and now I have to reduce my lifestyle because I only have so much and everything else has gone up. And so I think planning for it's one of those, really important parts. And the article goes through some different, recommendations to help beat inflation. And I'm just going to say, to me, the number one point, and the article touched on this, but just a little bit. And I think the number one point when it comes to helping beat inflation is being invested.
Yeah.
And being invested and having a portion of your investments in equities or stocks. And here's the reason for this. And let's just kind of use some simple math and look at the data. So that JP Morgan Guide to the Markets I was talking about, it said that 50-year average inflation rate was 3.9%. Now, they also looked and they said, hey, what's the average rate of return for stocks since 1950? So it goes 1950 to 2021. And what's the average rate of return for bonds 1950 to 2021? So it said in this time period, the average return for stocks was 11.5%. For bonds was 5.8%. So Ben, if we just do some simple math here, if we take 11.5% minus the inflation rate, right? Mm-hmm. So our average rate of return for stocks, 11.5 minus that average inflation rate of 3.9, that puts us 7.6%, right? Kind of on the positive, meaning growth above inflation. But if you're somebody who goes, oh, I'm just going to go into retirement, I'm just going to get super conservative, and I'm going to put everything in bonds, so that 5.8% average return, again, minus the average inflation rate, 3.9, that only gives you 1.9% of growth above inflation. Simple math tells me here it's important to have a portion of our funds, a portion of our retirement allocation over on the equity side to help make sure, again, not only do we keep up with inflation, but that way we're also outpacing it. The other thing that somebody could probably easily look at these numbers and come up with a little bit of concern with is that average rate of return for bonds at 5.8%. Right now, interest rates are super low. And so we might not see those kinds of returns with bonds over this next, 5-10 year period. And so I think, the number one point in helping to beat inflation is just making sure that we've got a portion of our retirement savings, of our investments, a portion in equities. Should you be 100% in equities? I'm not saying that. I'm saying it all depends. It depends on where you're at in life, because being 100% in equities and let's say you're in retirement, there's what's called sequence of return risk. We don't need to go, full depth into that, but it really depends on where you're at in life. How much do you need to make in withdrawals? Maybe, again, shift that over to the safer side, your war chest, and then have that balance in equities. Again, I find, and my feelings are that people can become too conservative in, let's call it that 5 years up to retirement and that first 5 to 10 years in retirement, and they become too conservative. They use old rules like the rule of 100. And so instead of having a good portion outpacing inflation. They're having just a portion that's too much of their retirement savings just keeping pace with inflation.
Yeah, so you want to sit down with the advisor and see exactly kind of where you stand and what you need to do. But looking at this article a little bit more from the New York Times, the other items they discussed here in helping beat inflation, Social Security, understanding your expenses, and inflation riders.
Yeah, and let's break these down a little bit. So I think Social Security, one of the things that they talk about there, and I agree with as well, is that, really planning out when you're going to take Social Security. And, should you wait to take Social Security? I think one thing that, sometimes people lose track of is that these cost of living adjustments, hey, it was a great, cost of living adjustment for 2022. So that 5.9%, that cost of living adjustment goes on your Social Security once you've decided to take it. So if you take it age, 66, all of your cost of living adjustments are going to be based on that amount. However, if you were to wait to age 70 and take a higher amount, your cost of living adjustments are now going to be based on that higher amount, meaning those cost of living adjustments are going to help you compound your Social Security amount even more. So, one thing to really think about and plan around, especially when it comes to keeping pace with inflation, is when should you take Social Security? I think people are living longer, and hesitating or waiting to take Social Security might be in your best benefit. Number two, understanding your expenses. I think, if you go into retirement and your expenses might be too high, you're spending a lot of your retirement savings up front. And then if those expenses continue to inflate and go up throughout your retirement, now all of a sudden you might not have enough retirement savings later on to keep up with your lifestyle. And because of inflation, gosh, you'd hate to, reduce your lifestyle later on in life. And so I think understanding your expenses as you go in, putting a projected inflation amount to them will really help you plan out and be more comfortable about your future. And then the third point that they had mentioned was these inflation riders. And so there's different, I'll call it tools or products that are out there that people are utilizing as part of their retirement planning. Some people are going out and getting long-term care insurance, right, to try to prepare for if they were to need home health care or nursing care or assisted living. And you could look at that cost and try to get a plan that's going to help you for costs today. But as we just talked about, those costs are drastically rising. And so a lot of these different tools have inflation riders. And so I highly recommend taking a look at the number one, understanding what you're getting, but then taking a look at the inflation riders and seeing if you should add an inflation rider to that tool. So for instance, long-term health insurance, maybe the monthly benefit now that it would provide is $3,000 a month or $5,000 a month. But then maybe you should be adding an inflation rider to that of 3% a year or 4% or 5% a year. So that way, when you actually need to use that protection in 20 years from now, instead of where it started at that $5,000 per month, 20 years from now, you're looking at, maybe $10,000 per month or whatever it's grown to because of the inflation rider. The other is that, I know that some people choose to use annuities for their retirement planning, and then they take these income riders with the annuities. And so that's something to be aware of too. Are you taking an income rider that's just going to be a flat payout? And if that's a flat payout, do you have somewhere else that you're going to be able to get money for payments, as the cost of goods go up? So do you have something that is growing with the economy and with inflation? Or do you take an annuity, and some of them actually have inflation riders on the payouts as well? So a lot of different ways in your planning itself to, take a look at things and make sure that you're including inflation in your thoughts and your planning so that you don't have to be, like they talked about in that first article, worried about it and fearful of it.
Yeah, that's what you want to try to avoid. That's the whole plan and why you are planning. Any other thoughts on this, Scott, before we kind of wrap it up?
I think kind of like I mentioned in the beginning, right now I get it. It's on everybody's mind because it spiked up so high. But just remember that's a 1-year measurement. If you look at that 50-year rolling average, that's a lot less. And so just try to, always keep perspective in mind. Those that are in retirement or approaching retirement, just have a plan in place and make sure that inflation is a discussion in your plan. As we go through and plan for all of our clients, we're not only including inflation numbers on their lifestyle expenses, we're including inflation number on potential health expenses. We're having discussions around it. And that's why we're also, looking at that retirement allocation and making sure that there is an appropriate amount on the growth and equity side of their portfolio, because we want to make sure we want to help our clients not only grow their assets with inflation, but help them also potentially outpace it.
Very good. Well, if you have any questions for Scott, want to talk about inflation and the risks specifically as it relates to you, log on to lifemoneyshow.com. You'll find this episode, all of our podcasts there, plus all Scott's videos that he creates. And you can call him if you prefer to do that, 847-235-6989. We'll also drop another resource for you, a JP Morgan guide to the markets. Scott, you can just kind of give me a quick explanation of what this can benefit, how this benefits people and what people can find from that.
Yeah, every quarter they come out with this guide to the markets. I will tell you, Ben, it is a lot of detail. I mean, they break down all the equity markets, all the fixed income markets. They do a great job of just providing a lot of detail of what they've seen in the last quarter, what they've seen in the last year. And then there's historical breakdowns as well, kind of looking, at things, whether it be 20 years back, 30 years back, 50 years back. So you can, see inflation over, for instance, one of the charts actually shows inflation, and you can see it, all the way back to 1971. I mean, you can see areas of recession and, what inflation has done in just different time frames throughout history. So they just do a really good job of providing a lot of different statistics. And, if you want to get into the weeds a little bit more, it's a great resource to check out.
Great. Again, we'll put that in the show notes. You can find it there wherever you're listening to the podcast. And while you're there, please hit subscribe, or you can find us online, lifemoneyshow.com. All right, Scott, that'll do it for us. I know this is such a big issue for a lot of people, and hopefully this gives them some things to chew on and kind of think about and maybe discuss with their advisor, whoever that might be. Hopefully it's you, but whoever that advisor is, they can kind of work through some of these things. And, for you, Scott, I hope when you get that next group of pork chops that hopefully that price has come down a little bit more.
I'm looking forward to it.
We appreciate the time as always, Scott, and thank you for listening to Your Life, Your Money. A new episode coming next week. Please hit subscribe, and we'll talk to you then.
Sierens Financial Group is an independent financial services firm that utilizes a variety of investment and insurance products. Investment advisory services offered only by duly registered individuals through AE Wealth Management, LLC. AE Wealth Management and Sierens Financial Group, Inc. are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Sierens Financial Group, Inc. is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein, provided by third parties, have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Sierens Financial Group, Inc.